Welcome back. Hope you're having a good Monday morning. Well, we've listed out all the top stocks you need to track. Let's get in Prakash Diwan. He's going to help us out with some analysis. Hi, Prakash. Good morning and good to see you in. Prakash, I wanted to ask you about, Inox as well as on Suzlon, because the government is weighing this reverse auction for wind energy projects, and that's not going to be good news for them. And these have been the big wealth creators if I look at it in a span of 18 to 24 months. So some money is going to be taken off the table, it appears. How do you approach these stocks?
Good morning, Nigel. So you're absolutely right. If you recall, one of the reasons why the entire sector, especially the turbine makers, suffered in the past was because of this reverse bidding, which tends to drive most project operators to outbid each other and then eventually kind of hurt themselves, right? The range at which the tariffs are today happening and some of the recent ones, which went through. As per the input that we have, one of the projects at 4.33 rupees this unit was, the pricing was not accepted, and it went all the way down to 3.79 or somewhere. So, which tells you that if this were to happen, it's going to impact a lot of viability. It may not impact the turbine guys immediately because they have a very decent order book on hand. But in terms of the growth projections that all of us are hearing about, in terms of what's baked into the prices, that would probably have to go through a reset. And the second thing, which is very challenging for this entire sector, is the evacuation part. We've had a huge interest coming into this, a lot of capital getting committed, but the number of people who are actually doing the EPC work, the balance of plant, the evacuation of all the energy that gets done in terms of connecting with substations into the grid, that is something which is a big missing piece anyway. So I think it's a lot to do with a reset and rethink on what these stocks are talking about or what these stocks are making you expect. I think they will go through a correction. This probably will be the trigger where some sort of a rub-off will happen, and that could lead to a little bit of a change in how you view them for the next few years.
All right. We have the management of Maruti that's coming up in just a while from now to talk about their sales. But I also wanted your thoughts, Prakash, on Bajaj Auto. There's an upgrade that has come in from JP Morgan this morning. They've upgraded Bajaj Auto to an overweight. They've raised the target price to 8,900 from 82.75 earlier. Is this a stock that you like and you think there's more upsides here? Because numbers were pretty good this time.
Good morning, Sonia. So first, I would love to hear the Maruti management, because there's lots that's happening there which we've probably not yet heard of or seen in terms of what the price is telling. On Bajaj Auto specifically, the upgrades are now actually corroborating the conviction that the management itself had when they offered that buyback. When they offered the buyback, it looked very outlandish. It looked quite skewed favorably in terms of people wanting to surrender equity. But now it tells you that the company was very sure of the kind of numbers that they've seen. I mean, on a YOY basis, some of them are at 35-40% up move. So it tells you that things are looking up for them. But the time to buy the stock was, a year and a half back, when there was a lot of talk on Nigeria and Latin America being soft on exports, weakness in currencies and all of that. This time around at 8,000, you probably don't get that kind of a delta. So I would look at Bajaj Auto. Hero is probably offering a very similar situation where there's an inflection in terms of its domestic sales. Demand hasn't started translating into numbers yet. But as and when it does post the monsoon, you'll probably have a stock which is still not caught up with the peers in terms of multiples. So play it safe. Bajaj Auto has done it bit. We'll probably consolidate from here, but it's Hero that I would look at.
All right. Thanks a lot for that, Prakash. Well, Prakash, you wanted to hear out the management. The body language is quite positive, but at this price, how is the risk reward for investors?
So, Sonia, that's the interesting part. Look at some of the data points that Mr. Srivastava shared. The SUV market share, which they started talking about working very actively, consciously on, was 11% last year, just about early last year. Calendar 23, they were just 11%. That's moved to 22. The target was 25. I'm not going to be surprised if we see that by June. That they will do that. The reason is very simple. They have continuously built a pipeline of new launches, which are far more superior in terms of price point than what they offer as compared to the largest SUV play from the MGs and the Kias of the world. So what they're doing is they're utilizing their cost efficiency again to build market share in SUV the way they did it in entry-level cars. So I think this will continue. And the next big trigger for Maruti, Sonia, and you know this, is going to be hybrids. The way they've collaborated with Toyota on launching hybrid variants of all the new products, including the the bestsellers like Ertiga and all, which are mass products. I wouldn't be surprised if Maruti starts building up a very good revenue pipeline. And the last thing is the realization levels in the last 5 years have changed so dramatically. We don't realize that, but Maruti is no more a small car or an entry-level car player. It's the fairly decent mid-size or upmarket kind of a segment. You know, it's C and D that they're looking at very actively. So all in all, it's at this price, the stock is probably giving you that opportunity to ride the next phase of expansion. But of course, it carries that weight of valuation, which could start looking a bit stretched if things don't happen. But I wouldn't hesitate to buy or add more to the stock at this level.
Prakash, I wanted your thoughts on Gujarat Gas. Morgan Stanley has an overweight on Gujarat Gas. They have a target price of 579 on that stock, and they're quite optimistic over here. Any thoughts on how one should approach this one?
So, Sonia, this is an interesting flip-flop. You know, we saw a few days back most brokerages downgrading the stock, given the fact that it had competitive intensity impacting its potential revenue growth and all. But if you actually look at the turnaround in sentiment, this was bound to happen because universally, gas, and especially CGD, is something which cannot have a slowdown. You know, it's as simple when you have so much of expansion happening, so much of exports happening. So, I spoke to some of the so-called tile units in Morbi, and these are large players who export, most of them in the unlisted space, so we don't really hear about them. They're saying we will need gas, whichever form it comes in. You know, it doesn't need to be just LNG, it could be propane, but the whole idea is that the demand side is so robust, they will build revenue. So I think at this price, it is offering you a very good entry point. Now, the question is whether you want to go for a CGD or whether you want to go for a pipeline producer, pipeline supplier like a Petronet LNG. You know, last month it was the darling of the markets. It rallied so much. Certainly people have lost focus because it's reached a level where they feel everything is priced in. You hear about all of these things and the news flow gives you that opportunity because secular trends are very clear. Gas is going to be the future. We could talk about coal and thermal energy from other sources, but gas will have its play, and there's no reason why Gujarat Gas won't participate in that. So I would be pretty optimistic, but I would not recommend a buy at this level, given the superior the options or alternatives available in that entire gas sector. So there are lots more promising stuff there, but Gujarat Gas definitely, I do agree with this change in mood towards the favorable side.
I think later this year, maybe early next year, expectations are that there will be, a gas glut, natural gas around the world, and for a big user like us, it's broadly net good news.
Prakash, I wanted to understand if you track the Swan Energy. It's been a big mover. They've raised money via the QIP. They're saying that they're repaying debt as well. But there is some other piece of news with regard to IFCO moving NCLT against Triumph Offshore and Swan Energy. I'm not sure whether it's the same listed entity, but any view on the stock? It's 22,000 crores of market capitalization now.
So, Nigel, interestingly, I have been reading up a lot on what it's been doing, the kind of restructuring it has undertaken, the kind of capital raise to back up all of the new businesses that are on the anvil. So it's in the right spot for sure. I really don't know about the execution part because this is yet to happen on some of the largest projects that they've talked about. Yeah, so we'll have to see that because remember, this is a very complex area where everything depends on execution once you have the financial closure on some of these projects. Just because you mentioned that space, I can tell you one of the areas that Swan Energy used to be into in its earlier avatar is ports. And if you see the kind of numbers that are coming from a port that Adani Ports acquired about 10 years back, if I recall, at about 5,500 crores. This port is called Dhamra, used to be part of L&T's portfolio. They sold it out. So, this sector on the east side particularly, this is on the east coast of India, which is under service if you compare it to the west. And I think that the growth is going to be in those pockets. So if this company does kind of manage to pull it off in terms of execution, it could definitely look promising. But at this point in time, I don't have an active view on it in terms of an investable opportunity at this point.
Okay, all right, got it. Just wanted to point out a couple of more stocks. The pre-opening rates are actually kicking in right now. Would be interesting to see some names. ICICI Bank is under a bit of pressure in pre-opening, so just keep an eye out on that. Eicher Motors, CV sales have actually been under pressure for the entire industry. So CV sales, all of these guys who have exposure to the CV market, whether it's Ashok Leyland, Eicher Motors, have been under pressure. TCS, HDFC Bank, Dr. Reddy's, Infosys are also a tad bit soft. While on the flip side, it is M&M, which is your big gainer, up about 3% odd. More on that later. But before we let you go, Prakash, any other stocks that you're looking at closely? Something that would be in your shopping basket that you would buy on a dip?
So a bit of boring stuff. So yeah, so L&T have been talking about since the time it gave you that opportunity at 3,300. But I think, and there are some reports which kind of bring out the fact that it's got a very qualitatively new build-up in order book. And the other stock, remember today, power as a sector is going to be under focus. There's lots that being talked about on the PSU power play, but I still probably feel Tata Power is one of those underowned, underrated stocks which could do well. So again, as I said, usually at the point in time we are, these stocks probably going to be into and sit for the next couple of years to ride.
All right, we leave it at that. Thanks a lot for joining. By